Welcome, everybody. Thanks for joining us today. I have my good friend and colleague out in Tampa, Florida, Sarah Contino, joining us. And today we are going to just highlight a few things, given this time of year, around all things Roth IRAs, backdoor Roths, Roth conversions, things that are applicable in any environment, but I think especially right now, given all that is going on. So how is it going today, Sarah?
Pretty good. How about you, Mark?
Good, good. We're still in fall mode here, getting ready for winter, which, a little cooler than it is out there, but,
Yeah, we don't really have fall here in Florida. It's still, I think, 90 degrees even in October, and you guys are getting ready to have snow.
yeah, I'll be wishing we had that here in another month or two. So, anyways, but thanks for joining today. I thought, I wanted to tackle a couple of topics today on Roths. A lot of our clients know what Roths are. A lot of them utilize them in their planning strategies or investment strategies for now and in the future. A lot of what we'll talk about today isn't just that, but I think tax advantages and tax planning opportunities because of what's being presented for our clients and a lot of investors in light of the current economic state, the pandemic, and other things that may be happening next year and in the future. So I wanted to ask you, Sarah, because you're really experienced and you have a lot of conversations with your clients about this. But when it comes to Roth, maybe just help our audience with a quick refresher on some of the highlights about the benefits of Roths and what you're seeing with the light of your clients in terms of advice you're providing them.
Yeah, so I think, most often when we're talking to clients about different retirement accounts, they don't know the difference or don't see the benefit, or maybe just haven't learned the benefit before of a Roth. And what makes it so different from the other retirement accounts is while your contributions and your investments are growing tax deferred in the account, once you decide to take distributions, they come out tax free. So that's a huge benefit, especially as we're trying to do all this retirement planning. We often have to think of a lot of tax planning as well as we go into the future, and they start a distribution phase at some point. We have also talked about how, given current events and the current environment, what taxes might be in the future. And so we don't know exactly what that will look like, but I think a lot of people do anticipate that taxes will probably go up. So if that is the case, then I think given or trying to provide more of an opportunity for folks to have that tax-free option of funds coming out is such a huge benefit, and just something that I think a lot of people often overlook.
That's a good point. And given that they overlook sometimes this benefit or this strategy, why do you think that is? What are some of the limitations or what causes them to overlook or just not utilize Roths to their advantage, during their working years, especially?
Yeah. So I would say that the most common thing that I get from folks is that they feel like they don't qualify from an income standpoint. The income levels or eligibility limits have been raised over the years. So for example, if you're a single individual and you have a modified adjusted gross income under $139,000 a year for 2020, you'll still be eligible to at least make a partial contribution, if not full, of $6,000 to a Roth IRA. For married couples, it can go up to, if your joint income is under $206,000. So the eligibility has grown quite a bit. If we go back like 10 years ago or something, and I think that is one of the items that people often forget about is, just having the ability based on your income to be able to do that.
So given that income, that's a good point. Those income levels, whether it's individual, especially at a joint level, is good for investors or clients to remember. What about when they exceed those income levels? Because I feel like people I talk to, when we suggest potential Roth strategies or advanced planning opportunities, they don't realize that they might still be able to utilize a Roth in their plan because their income levels have exceeded where they thought the limitations were. So maybe talk to us about, a little bit about that opportunity.
Yeah. So typically what will happen too is, if they say, well, my income has exceeded that amount, I can't do it, and they kind of forget about it. One opportunity is called a backdoor Roth IRA. which isn't anything really but just a Roth IRA. It's just sort of a tactic that we can use to help somebody contribute to a Roth IRA if they've exceeded the traditional income limits. And the other item and how this kind of works together is that people think that, well, if I make more than, because the numbers for the traditional IRA eligibility for deductions are the same. So they feel like, well, if I went over those deduction amounts, I can't make a contribution to a traditional IRA, but you can. You just can't deduct it anymore once you reach beyond the 139 or the 206 limits. So once you make that traditional contribution, since you don't get a deduction, you can take that amount and then convert it over to a Roth IRA. And since you've already paid tax on that money, then no further steps really are needed. And it can be a little bit more complicated than that. There's definitely some other planning components that we need to consider, but yeah, it's pretty much as simple as that. And I think a lot of times when I've brought that up to people, they're like, hold on a second, there's got to be some kind of catch. How does the IRS not know about this? But yeah, that's a pretty easy way for you to be able to make that contribution and then have that money be eligible for you to take out as a tax-free distribution when you're ready to do so.
And that's a good point. Understanding the opportunities and not so much tricks per se, which sometimes people view them as, but just what's available, what the IRS is giving us as opportunities to take advantage of is kind of how I view that with clients. And then what about, kind of the last question I think I was curious about, what about a lot of the clients who now might have Roth provisions at their 401k at their company? I mean, how does that work, and what would you suggest that investors look for at their own company options, which might be available?
Right. So a lot of times what people don't realize is that within their own current company plans, they're working for a corporation and they've got a 401k, they're making contributions, that they actually may now have an option to elect some of their deductions from their paycheck to go into the Roth as well. So they could do pre-tax as well as put some of that money into a Roth, which allows them to exceed potentially beyond just the $6,000 per year if you're under 50 or $7,000 per year if you're over 50. So that requires a little bit of tax planning and definitely some longer term financial planning to try to figure out the sweet spot of what makes sense for you in your situation. Do we need a lot more Roth? Should we kind of heavyweight that? Should we go back and do more pre-tax? But I think a lot of folks just don't even know that that's an option there. So that would be the first step, is just, find out more about the 401k and the retirement plan that's available.
Yeah, it's a good point. And that's where I think a lot of folks just need to know what they have access to and what's available to them in their planning. Kind of shifting gears to Roth conversions. I know you mentioned a minute ago a little bit about some of these backdoor options or just ways to take advantage again of what the IRS is admitting us to. What are your thoughts there about Roth conversions?
Well, it's a hotly debated item. There's always the should I or shouldn't I, and I think each situation needs to be evaluated, because basically what you're doing is you're taking what were either traditional IRA contributions or maybe all or part of a 401k, an old 401k, and saying, I'm going to flip this over to something that I'd have to pay taxes on in the future, pay them now so that I don't have to at some point in the future when I take my distributions from my Roth. So it's really do I want to pay tax now or in the future? And it has a lot to do with maybe some of our assumptions. What do we think taxes are going to look like? What are your taxes going to look like? There are a lot of times that we find that it's kind of a break even, but again, I think that's an important analysis to do with each person to find out, does it meet their needs? Is it going to be a benefit to them? But, I don't know if you have thoughts on that too, or.
Yeah, it's interesting because the Roth conversion discussion, it's been around, it's been available for a while. I think a few years ago, there were some limitations around how much income somebody made and whether they could do one or not, but that got removed, which is great, and some other changes to the Roth structure as well. But overall, the conversions, yeah, from what we've seen, or I've seen with a lot of either clients or discussions we've been having, is that it's available. It's there, like you mentioned, Sarah, for people that want to take advantage of tax-free income in the future. And a lot of that stems on where you think tax rates are today relative to down the road. Not because maybe the IRS is going to have them in place, but perhaps somebody's tax situation might just be different because they're going to have more guaranteed income sources coming to them from pensions, Social Security that kicks in at a later age. So there might be ways to take advantage of that tax-free growth, but also tax-free distribution in the future. I think one thing that we've seen a lot of opportunity, which is why we've been having these discussions, is for good or better or for worse, is the pandemic. It's impacted some people's income, perhaps where they've had a change in income. So now might be a chance to take advantage of this because maybe they are eligible for not just a contribution, but perhaps a conversion up to a certain point, but it does take some tax planning. I think the other thing that people forget about is that taxes don't just exist when somebody is working. So for a lot of our folks that are about to retire that we've seen or are in early retirement, the Roth IRA or the Roth conversion per se can be a pretty sweet vehicle to take advantage of because it allows them to just remove that mandatory distribution that got pushed back from 70 to 72 now with the new Secure Act. But especially that's beneficial if they're not going to need to take the distribution. So why pay tax potentially later when your tax bracket's higher? So these are the things that there's a lot bigger discussion in this. Our blog that we'll be having this week is going to talk much more in depth on considerations around this. So check that out. I tell the audience to look there because this does require, but it is a big advantage, I think, for a lot of people potentially.
Definitely is. So many more things too, I think, about Roth IRAs that we haven't even really had a chance yet to discuss in this video. I know the blog will go in a bit more in depth to that, but just in general, I think it's important to review with us and kind of talk about your situation or financial planning and how it impacts you, because there's just a ton of benefits.
Absolutely. No, I think that's a good point. I mean, we'll get more into this, obviously, between now and year end. We're going to hear a lot more about strategies for taxes and all things IRAs, especially Roths, and the election may have an impact on that. We'll see as far as future opportunities as well. But regardless, it's something that all investors we think should take advantage of. So that's all I had today. Sarah, any other thoughts to leave with our audience on your end, or?
No, I think just the more that you can spend time talking with us and making sure that we're bringing up those topics, we don't want to leave any stone unturned, and we want to make sure that we're making the most efficient plan possible for somebody. So it's worthwhile to explore some of these opportunities.
Absolutely. Well, thanks again, Sarah, for the time as always. Good chat with you as usual, and thanks everyone for joining us. We'll talk to you all soon.
Thank you.